Let us start in this section with a brief introduction of lease accounting from the perspective of the lessee. Lease transactions are accounted for, both on and after the commencement date. On the commencement date, the standard requires the lessee to recognize a right-of-use asset, and a lease liability for almost every lease transaction. The lease liability is measured by calculating the present value of the lease payments that will be paid after the commencement date. The lease payments are the payments made by the lessee to the lessor for having the right to use the leased asset during the lease term. The discount rate that should be used in discounting these lease payments is the interest rate implicit in the lease, if it is readily determinable. Otherwise, the lessee's incremental borrowing rate should be used. The right-of-use asset represents the lessee's right to use the leased asset for the lease term. It is initially measured at cost at the commencement date. Both the lease payments and the right-of-use asset include several components that will be covered in the few lectures to come. As for lease accounting after the commencement date, the carrying amount of the lease liability is increased by interest charges, and decreased by the lease payments made. The right-of-use asset is measured using the cost model, unless either the fair value model of IAS 40, or the revaluation model of IAS 16 is applied. So, under the cost model, the lessee shall measure the right-of-use asset at cost, less any accumulated depreciation and any accumulated impairment losses. The depreciation requirements in IAS 16 are used in depreciating the right-of-use asset. As for the depreciation period, it is figured out as follows. If the ownership of the leased asset transfers to the lessee by the end of the lease term, then the depreciation period will be from the commencement date to the end of the useful life of the underlying asset. If there is no transfer of ownership, then the depreciation period will be from the commencement date to the earlier of the end of the useful life of underlying asset, or the end of the lease term. Also, the impairment requirements in IAS 36 are used to figure out whether the right-of-use asset is impaired. In case an impairment loss is identified, the new carrying amount of the right-of-use asset is depreciated from the date of impairment till the end of the depreciation period. Some changes or lease modifications might occur after the commencement date, that requires a reassessment of the carrying amount of the lease liability, and in turns, the right-of-use asset. Exemptions exist with respect to short-term leases, and leases of low-value assets, where the lessee can elect not to recognize a right-of-use asset, and a lease liability, but instead, recognize lease payments directly as expenses in the profit and loss. Well, we will go through all these, step by step, and illustrate with examples. So, let us check the following lecture.